In this video, we will see why most people fail at stock picking, even people that are bright, people that are very smart, because investing is very different. It's not about who has the best IQ, who has the highest IQ, but who has the better framework, the best process, and the best temperament for stock picking. Warren Buffett was asked a couple of years ago, what is the most important thing in investing? He said it's temperament. People that are emotion driven will be a low quality investor, because if you are driven by your emotions, you sell at the wrong time, you buy at the wrong time. The best investors are rational ones. You look at the best investors of the world, Warren Buffett, Charlie Munger, Li Lu, they just analyze data, and when you have conviction, they bet big. This is how they have built their legend. So in this video, I want to talk about this because I believe it will help a lot of people in my audience, people that are very bright, but they don't have the performance they deserve. Okay, I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Nour. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my goal with this YouTube channel is to help you become a better investor. Okay, so a lot of high IQ people, very smart people, are losing money in the stock market. I've seen engineers, doctors, analysts underperform the market for years. And you have a great quote saying you have the choice actually in the market. Either you sound smart or you can make money. You can choose. Same thing for being a bear or a bull. Bears sound smart, bulls make money. If you look at the internet, you will see articles. You will see that plenty of articles are written for clicks. Very smart minds writing elegant articles. How the world will end, how the stock price will fall because of this reason and this reason and this reason. Always bad, negative articles, bear articles, will always sound very smart. You have plenty of reasons to be bearish on stocks, but bear people rarely make money. So again, I'm asking you the question, do you want to sound smart? Do you want to feel smart? Or do you want to make money? Actually, it's a very different way of investing. If you want to sound smart, you will rely on too much information. You will be aware of everything that's happening in the world. But actually, there is a trap here because not everything is important in this world. You have a lot of information, macro data, that is a waste of your time, completely irrelevant. The reason these high IQ people underperform is they rely on information and they don't have a framework. They know too much, they apply too little. So they pick stocks from YouTube, from Reddit, or because it feels right. They watch a video on YouTube and they say, okay, let me invest a little bit of this one because I can borrow conviction. They read an article on Seeking Alpha or a Substack and they say, okay, let me short this stock because I've read a very good article and I think I'm bright enough to just understand the situation. And actually, this way of investing is not helpful to your long-term performance, because if you borrow conviction, you will never know what you really own. You will never have the guts to bet big when you have to bet big. You will have a diversified portfolio you know little about, and you will not monitor what is happening. Okay? You rely on external data. Maybe the external data is wrong. Maybe the YouTube video is wrong. Maybe the Reddit article is wrong. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. They made a mistake in the YouTube video. So you borrowed conviction, you didn't do the work, the due diligence, and this is the reason you may fall into a trap. So you can be very smart, high IQ, but as long as you don't do the work, the due diligence, you will not outperform the market. Okay? You know too much and your attention span is diluted across different websites, YouTube, Reddit, Substacks, etc. And you lack a reputable process if you are in this category. So these kind of people, they get one hit, one double, and then one flop, the stock drops, and no conviction, because the conviction is borrowed from somebody else. Even smart investors panic when they don't understand what they bought. My points here, 1, 2, 3, 4, my 4 points here lead to borrowed conviction. So you don't really know what you own. So your portfolio is too diversified. And when there is a problem in the market, when there is a crash, when there is a correction, or when a specific stock drops, since you have not done the analysis, you don't know what is happening, so you panic sell. You can be very smart, but if you are emotion driven and you have no due diligence, you will panic sell at the wrong time. And this is the worst thing to do. So I've seen this many times, actually. Many times, high IQ people, they know a lot about plenty of companies, but they act too fast with emotions, because out of all the information, they don't know the 3 things that are the most important for what they own, their stocks. For all your stocks in your portfolio, you have a few KPIs to monitor, right? You are a stock investor, a business investor. You have to know what is important, what is not important. Not everything is important. If you only have to follow 3 things or 5 things for the company, what is this? What are the 5 KPIs to monitor? And if you don't know this, you are wasting your time. You don't need to be a genius to know this, actually. You can just ask Gemini, ask ChatGPT, or go on the annual report and look at really the correlation between the metrics and the stock price. What makes the stock price go up? Only 3 things matter. If the 3 things are positive and growing, life is good. If the metrics are positive and growing and the stock price is dropping, that's a challenge. What will you do in this situation? And most people don't know because they don't do the work. So even smart investors panic when they don't understand why they bought. If there is a panic, we've seen some stock market corrections. Very smart people sold at the exact wrong time. And it is very difficult to buy back, to go back in the market when you have sold. It's about psychology at this point. The solution for this is really simple: to use a structured decision framework that filters noise and builds logic into every pick. First point, can you spot the top 3 things that are important for all your companies? Okay. 2, do you borrow your conviction or do you build your conviction? How many hours have you spent on every stock? I'm telling you, the best investors are not borrowing conviction. If you really want to outperform the market, you need to build your own conviction. And a good way to know if you know enough is, do you know all the bullish arguments? And do you know all the bearish arguments? You want to know what can go wrong for your companies. For example, before buying a stock, you can have the top 5 risks that can kill my business. What are the top 5 things that can kill my stock? What if the revenue decelerates or they lose customers? What are the 5 key risks? Most people don't know this. Most people watch YouTube videos, they borrow conviction, and they actually don't know. So very good exercise here. And if you know the top 5 KPIs that are important to monitor, the top 5 risks for a company, you will build much more conviction in your analysis. You can hold, you can buy the dip, you will really know what you own. Again, what do you want? Do you want to sound smart or do you want to make money? And it's by building the conviction and doing the work that you can make money and finally outperform the market. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.